Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you haven't. Just remember the disclaimers. Nothing should be construed as financial investment advice. Just my opinions, thoughts on the market. And there's a couple of things I wanted to get into. Share my screen real quick. And I always, try to preach on my channel. Be honest with yourself. Don't be ideological. Don't fall into it, where it's uh any type, where it's Austrian economics or Keynesian or any of those ideologies. They will ruin you and they're poisoning you. And I just want to get into one thing that was big, and I didn't buy into it because I'm sort of honest with myself and honest who's in charge. And the big thing was the stimulus checks coming from the big, beautiful bill. They always thought. And one person issued a correction, but I knew that was BS despite the rumors floating. Uh, and the reason why, is you have to understand the truth. They would never do anything. They would never do anything to help out the common man. Most of the welfare in the US is corporate welfare or welfare for the elderly. They despised the youth historic population, and they would never do anything that would even remotely seem as helping. And I was just honest about it. And I'm going to share my screen. Look at this. Hasn't approved new stimulus checks. Some lawmakers push for relief, but I don't I don't think this is going to happen. I mean, the bill's passed, it's done with think what you like. But a lot of people they believe that this most of the welfare is spent on, lazy people who don't work. And the reality is a lot of it's foreign, a lot of it's for corporate companies. Like the COVID stimulus went to Tom Brady. Uh, who's that other Oscar De La Hoya? Uh, let me see. Like most people don't know this. Look at this. Tom Brady, almost $1 million. Of course, from my knowledge, I don't know exactly, but COVID stimulus loans. Let me see. Uh, uh, so yeah, a lot of them did not have to be repaid. Paycheck protection, there's forgiveness. So, required for forgiveness. So, in my opinion, that's if you're connected, they'll forgive you. So, anyway, don't when you hear something, always question it. That's why I didn't really talk about it. But let's get into today's stuff. The U.S. housing market index, and this is the other thing is a lot of these high home prices is basically indirect welfare for the rich. And here's what I'm talking about. Average price reduction is 5%. This is the United States NAB housing market. It's been the same every month since November. Use of sales incentives. 66% up from 62 in July, the highest percentage post-COVID period. At some point, they're going to have to start cutting prices. These incentives are not enough. And the prices have to come down. So anyway, uh, that's the thing. There was nothing really too big. Building permits, housing starts, a lot of housing data tomorrow. So we'll see how that goes. I'm not going to be able to do a video much of this week. But this is the other thing is I just want to piggyback on the interview is I was just talking about healthcare, and I didn't know this, so think what you like, but I just grew up with a lot older people who think the US hands down has the best medical system, but this is AI, so medical misdiagnoses and errors are concerned in healthcare systems worldwide, but research indicates US experiences higher rates than compared to European nations. Interesting viewpoint because I used to be afraid of European healthcare systems, and I might actually live it for the rest of my life sometime in the future. But so, for better or for worse, I don't know. But yeah, I didn't know this. I didn't know the medical misdiagnosis was so bad in America. So higher rates than many European nations. So anyway, think what you like. I mean, I don't know if there's really a good healthcare system in this world, so I'm not married to one or the other. And let's get rid of that. So, other news that I just found interesting. TerraWolf stock jumps as Google upstakes for Bitcoin. So, Google, all these businesses, Bitcoin's going to be combined. And when these businesses go down, Bitcoin's going down with it. So, don't think it's outside the system. It's with Google, PNC, everything. Uh, I don't know. Whatever the S&P goes, that's where Google's go. That's where Bitcoin's going to go. So I think the stock market will be set up for a long decade bear market. Then I think it will come back to a bull market. That'll probably be Bitcoin. And then I was looking at this. I just thought this was fine. No one's benefits more from the lower rates than the U.S. government. I remember thinking that, and I was like, "Yeah, thanks, Sherlock." Like, I mean, I didn't even know, but interest expense in the U.S. has never been bigger. And this is very interesting. I think the only larger budget item is I think well, I'm not going to say what I think it is because I thought it was cited here, but yeah, I mean, think what you like. That's probably why Trump wants to cut rates. And then there's two more. I just thought this was funny. I'll do comedic relief. What would happen if Americans started faking its economic data? So far, nothing, because it's been doing that for a long time, if you ask me. And the thing is, I do agree that with Trump that the data is fudge, but all the fudge data is greatly overstating how good the economy is, how low inflation is. None of it is trying to make him look bad. In fact, if anything, I think the job numbers over were too nice to him. I think the revisions were too nice and they were too small. They should have revised it. Let's say they create, I don't know the exact numbers, but they should have took away all the jobs and then had it negative. So anyway, just thought it was funny. What would it do? It does fake the economic data, especially the inflation. So this is the one of the last two things, and I thought this was interesting because Wall Street's now getting bearish. Goldman Sachs economics teams more jobs weakness is coming, and so Goldman Sachs slowdown in job market isn't over; it may get worse. Went from Goldman Sachs economist said hiring momentum has weakened more than previously thought. Uh, Payroll growth running at levels too low to sustain full employment. Future revisions to job growth are more likely to be negative. Weakness in areas payroll, seasonal hiring, and the way government counts for new businesses. That's the other thing. The birth death miles is absurd. And one example is the birth death model. I'm just going from memory. I'm not going to go cite it. You're just going to have to take my word for it. If I make any mistakes, I'm sorry. But if you create a new business, they assume job growth. But the reality is some people they'll create an LLC, limited liability corporation, and then buy a property and rent it out. And the reason why is I'm not any type of financial investment advisor or anything, but my understanding is why people do this is if you sue them, you can only sue that company. You cannot sue the assets. So you can't sue for the other assets, like the person's house, their stock portfolio, and everything else. So they own it in an LLC. And that's why, so, but that doesn't create any jobs. And there's a lot of people who own stuff like Porter Stansberry told me at a conference one time, I never own anything in my in my name. It's all in businesses. So that way, if they sue me, they really can't get anything. His real name's Frank, by the way. But I've never met him, don't know him. I mean, no, I've met him, but I don't know him. I was just at a conference. I talked to him. He wouldn't even know who I am. If he saw, if someone's like, Porter, do you know him? Or have you ever talked to him? He'd be like, no. Or he might say, hey, I've talked to a lot of people. So yeah, he doesn't know me, doesn't know who I am, no relationship, nothing. So don't go around thinking I know him or anything. It's just something. And he says this to a lot of people. I don't know anything, at least from my knowledge. So anyway, so let's go more. Anything I felt more. So labor force participation has slipped, job openings have started falling, and hiring outside of a handful of industries, it's to zero. So Goldman Sachs expects 3/4 point cuts this year, September, October, December, especially two in 2026 if hiring stays soft. So but it says because of immigration falling, economy needs fewer jobs to maintain full employment. So so it basically said teaching, healthcare, and education, they're no longer seeing growth, which, for better or for worse, let you think about what you want. But other sectors, technology, manufacturing, retail, are also facing labor force headwinds. So that there it is. Like, I mean, Goldman Sachs expects, which I'm not really all that. I mean, I don't know exactly what to think of it. I don't know if they're getting inside info and they're trying to boost their credibility, or is this a contrarian indicator, meaning the market will go up? So I don't know. You can think what you like about it. For this, I'm just going to report it. You know, I think they're going to keep juicing up those markets the next couple of months. And this is probably, in my opinion, not advice or anything, probably a contrarian indicator because markets end when Wall Streets are very bullish. So this probably means the market has more room to run. Don't know, but anyway. And this is what I'm saying. If I ran things piggybacking on my video yesterday, Italy undercover pizza detectives. I'd have one of these for Caesar salad, making sure that the Caesar salad's name is correct. So if you haven't seen it, go look at my last video. So that's all I have for today. Remember, disclaimer, nothing should be construed as financial investment advice. Just my opinions, thoughts on the market. I'll see you next video. Probably won't do a video for a couple of days or so. Beat, exhausted, and life comes at you fast. All right, have a good one.